Bear markets and recessions are scary. They don't feel good. It's a total show out there. It's everything, right? We're starting the big liquidation phase in pretty much everything. It's a mess. You've seen what's going on with the Terra ecosystem as well. I mean, they're actively selling Bitcoin. I hear, Jump in that whole equation is selling Ethereum. It's just liquidation of everything. And it's interesting because it's spilling out into the macro world as well, obviously. It's like stuff like oil, which was like the last thing that was holding up the inflation narrative, is starting to get properly clocked. Everybody, in every position is about to lose money. We've had this really complicated macro situation where we had supply chain shocks, which was people can get factories and ships sorted out because people were still in lockdown with COVID. There was a massive backlog of orders, and this filtered through, and that raised prices because everyone, if there's a shortage of goods, if you pay more, you get the goods, right? So that puts prices up. Then we start to see issues in the commodity sector that have underinvested. So everybody comes online again, everybody wants oil, gas, everything else, so commodity prices start exploding. Then we add on a Russia-Ukraine war and the penalties on Russia, and that takes a bunch of commodities out of the market. So now we're in this perfect storm of prices rising. But people are also scrambling, like all of us, probably you guys as well, to try and hire people. So we're all bidding up wages. But wages, outside of some jobs, aren't rising as much as prices. So what we've got is this situation where wages have gone up, let's say 4.5%, and prices have risen 8.5%. So everyone's taken a 4.5% or 4% haircut in their net worth. Now that hit crypto. It started as soon as inflation happened, because if you think of crypto as a groundswell movement, basically the dollar cost averaging by average people who are in the space had started drying up, and we saw all the on-chain activity basically flatten out, and we've been in this sideways sloppy range because we've seen no network growth across the entire ecosystem. Within crypto, we'll talk about that later, but so that slowed down there, but we still had that kind of after effects of stimulus, people coming online, so economies were growing, but it now looks like all the forward-looking indicators are starting to roll over and starting to show recession, because you've basically given everybody a income haircut. So discretionary spending is going down the toilet. We're seeing it in things like restaurant spend. We've seen consumer credit going up, so people are desperately trying to borrow money to maintain their expenditure plans. We've seen mortgages go up by the most in history as a percentage. They've absolutely exploded higher. We've seen 2-year interest rates with the largest 1-year rate of change in all recorded history. So what we've got, if you add all of these things, and we've seen the US dollar going up fast, when you put these things together, what you've got is the fastest tightening of monetary conditions in history. And we've seen it, the big tech companies are all starting to lay off staff. They're all like, holy shit, even Amazon said we're overstaffed. So we've completely turned the economy from, oh great, we're coming out of recession from the pandemic, to, oh my God, we're going straight back into recession. The market's tightened before the Fed even got round to doing it. The market did its job, and it stopped economic growth dead in its tracks. Europe's already in recession. China looks like it's in recession and is in lockdown again. To complicate the picture, we don't know what that means for supply chains. I think inflation falls, and I think the Fed pivot soon. It's like 2018. But 2018, the S&P was down 22%. It's only down about 15, 16 now. So I think there's more pain to come before the Fed suddenly realise that growth's gone. And the bond market will tell us that first. It always does. Yields will start falling, and that will be probably the signal, as we had in 2018, crypto stabilises, the growth end of equity starts stabilising because they realise that some stimulus is coming. And so there's a lot, it's a bit of a monologue, but there's a lot to get through. If inflation is still high-ish, because it's going to take a while to come down, but I think it comes down pretty fast, but let's say it's still at 5%, and the economy is now headed directly into recession, what do the Fed do? Well, they're unlikely to purely stimulate it because optically that doesn't look right. So my guess is they'll do what Europe's starting to do and Japan's starting to do, which is direct transfer payments that I've been talking about for a while, which is basically MMT. So i.e., you give money to the people who need it to cover the costs of their bills going up, and you basically finance it by buying bonds. So I think we're going to see stimulus coming faster than people expect in certain parts of the economy. In Europe, they're doing it for corporations who've got high energy prices, and they're doing it to households. Japan's doing it to households as well. So it's coming. So there's a lot. There's this transition from inflation to demand destruction to stimulus. That cycle is in play. It depends what your pain tolerance is. So, I put money into the ecosystem and just said, well, I'm just not really going to look at my P&L because I want to be in it for a longer haul. Is that the right move? Because in the cycle which one was it? 2013, I bought Bitcoin early 2013 and sold it into the rally in 2018, but too early. And then I didn't get back in until the lows. That worked too. So you don't have to hold on. So if your pain tolerance is, I could do something else with this money or just keep it in stables, do that too. That's okay. I've just kind of thought, well, if I just write it off and just don't think about it, then I can just leave it there and I can add to it. And I kind of do that with, I learnt this trick with wine. So I collect a bit of wine. Stuff that I've bought, I write off immediately and I try and forget what I paid for it. And I stick it in storage, and 10 years later, I don't have oh my God, I can't open that. And you just forget about the value of it. And what you get is at the end, you get this amazing wine at the end of it that you can drink and you don't think about it. With crypto, it just allows you to be in it. So I look at the price chart all day. I mean, I've got like 5 fucking crypto charts next to me in real time on my Bloomberg. But I'll have a peak at highs and I won't at lows, because I'm not going to do anything. I'm not going to sell it. And really, all I want to do is, if I can generate some more cash and my wife stops buying stuff, I could then put it just more into crypto, because my belief is in the network adoption and the space overall. And this is one of the biggest fundamental change to both the financial economy and business models that we will ever live through or have ever lived through. And to not participate is stupid. You come in every day, unless you're short. And I used to always trade these from the short side, so I loved these. But now I'm kind of looking at it from the other way around, and they don't feel as good. And I prefer the bull market. But this is how the world always plays out. Is there a structural change in the economy that means things don't recover? There is a non-zero, it is not a non-zero chance, i.e. there's a decent probability that we could structurally change how markets and the economy works. So that would be more scary, because then you don't get to get your money back. But generally speaking, I think that central banks and their magic bullet drives up asset prices over time. So if you remember that, just make sure you own some of those magic bullets when they come, and that is owning some of these assets. So it shouldn't be scary. If you've got any cash, then you can buy more at great prices. If you haven't, then you need to make a decision, is how secure is your income? That's the key to everything. Income is everything, assets are nothing. Is your income secure? If your income's secure, you just ride it out. If your income's not secure, then liquidate your assets and give yourself some cash. And in that situation, a friend of mine early on in my career gave me the great piece of advice, which was, he who has cash in a recession is king, because that's when you can buy everything on discount. That's when you can book any restaurant you want. You can buy anything you want. So that's the key. So just, if you can keep that in the back of your mind, yes, it feels scary, but maybe you can take advantage of it. Somebody asked me this question, it's like, okay, so this is the known one. What other liquidations? I mean, obviously the market says, do we need to go and test micro strategies? I don't know, but that's a long way down. I'd rather that didn't happen, but who knows? Because the markets seek these pain points. They always take the path of pain. And it's when everybody's max bearish and fearful of everything as the market screams higher and nobody believes it. This is just how psychology works. So I don't know whether we're there yet, but we're in the end phases. I kind of feel like ETH probably gets back down to 2,000. But all well and done. If we stand back from the drama of the markets, ETH and Bitcoin putting their low, well, Bitcoin might make a new low, but ETH putting its low, when was it? June? July? Last year? And we've thrown 8.5% inflation, an oncoming recession. We've thrown all sorts of stuff in the market, didn't make a new low. So it's this sloppy sideways range. The internal ETH economy has been pretty good, as we know from NFTs and other stuff. DeFi's been a bit quiet, but NFTs have been active. So the ETH economy itself's been good, but the ETH economy has not been growing. No new participants have come in. But I think we're close to the final liquidation. In the technical indicators I've got, I think we've got another month to go, however, and it can get ugly. I look at the chart of Ethereum and I'm like, this could be a head and shoulders top, in which case we go significantly lower. We go back down to 1500. Who knows? What's more likely is, I think, is we're forming another sort of wedge, and that therefore 2000 is the low. I just, I don't know. These are volatile assets. But that the early adopted, so Solana should be what Ethereum was in the last cycle. Well, it's going to be somewhere around that, right? And we've seen that play out, that kind of, Ethereum's been slightly different because it had so much adoption in this cycle. But generally speaking, they kind of look like each other at early stages, like the Amazon. So the early ones look like Amazon, and they become less like Amazon they become less volatile over time. So Bitcoin and ETH seem very similar these days in that kind of volatility structure. But, Solana, Terra, all of this needs to be proven out. So it looks that Ethereum is over fair value because of the burning, which is a different source of demand that doesn't appear in the Metcalfe's law kind of models. I think that's interesting, and that has been why Ethereum has done very differently. Now, if that increases because of the triple halving effect, then that should further lead to the Bitcoin outperformance, the ETH outperformance of Bitcoin, which I've been watching for an extended period of time, and that seems to be ongoing. So barring any change in anything, it should outperform over time, unless something dramatically changes with volume structures. Now, we go back to earlier, what I said is, when I look at my analysis, Ethereum is going nowhere. We've got no new participants, and Bitcoin's going nowhere. But Ethereum has had luck because it's had NFTs, and they've burnt a shit ton of tokens. And that's been because Ethereum ecosystem is vibrant within it. It's just not growing, people are not coming into it. I haven't done anything. I've not sold a single thing, not done anything. I've started to average in on the really growthy tech stocks for the reasons we talked about, because into the carnage. If I'm right, and this is a super trend and a super cycle, then you want to be owning this stuff for the long run. Now, which companies are going to succeed or fail, we don't know. So you buy kind of baskets of stuff, much like you might do if you wanted to capture the movement in crypto. Crypto is the same, you've got to be, if you believe that network adoption continues, then this is when you should be buying. I had a go at buying calls on ETH to say, look, if the previous pattern kind of held out, then we could have seen a run in December through to March, which failed to happen. But I stuck like 5% of my ETH in some call options, or I added 5% in call options, and that didn't work out. Well, it's bizarre. People pick on me for doing that. I mean, it's like it's a mitigated risk, good upside opportunity. It didn't work out. I mean, 5% is like the bid offer spread on a day like today. So who cares, right? So I did that, and then I bought some NFTs. I got involved in the Bored Ape thing because I loved not that bothered about the Bored Ape community itself. It's a vibrant community, it's good, but it wasn't, I don't really like to be members of clubs because, I don't like to be pigeonholed, but I love what Yuga was doing because that's the playbook that's been in my head, which is you build engagement and utility with NFTs, and then you build a social token around it, and then you use that. That's been the playbook that I'm building a business around as well. And I saw that the moment I saw the Ape coin was actually coming out and saw what they've done with Lava Labs, I thought I need to get in and I want to own part of this ecosystem and hold it for the long run because this is something very interesting. And I bought some other NFTs because I was interested in them, just to have a feeling like an MFer, just because that was quite a vibrant community. The CCO model is quite interesting. I also wanted to own a little bit of art-based stuff, so I was interested in Damien Hirst because he was an artist I grew up with, and he's experimenting with the currency where they're either going to burn the art or burn the token. You get the choice, and you don't know which one's going to be more valuable. Just a fascinating experiment, and Damien Hirst is a cultural English icon. And then I also bought one of the X copy, Max Payne and Friends, because I think his art is amazing, but I'm not going to stump up the full cash needed for a proper X copy. So I bought a few NFTs just to get my toes in the water. and just be involved.